Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Lots going on here, and particularly gold printing through 2,300. What do you make of gold?
It's just extraordinary here. I mean, it's
2,300. China. I'm with Rebecca Patterson.
Central banks. I've been here. Central banks have been buying gold.
China's,
I guess why not?
Well, no, why not? We get a brief here into the blur of our labor economy over Thursday and Friday in the markets. Equities, bonds, currencies, commodities. Rebecca Patterson joins us for years with Bessemer Trust, with Bridgewater, and now about thinking about these markets. Rebecca, classic you, in your note, you speak of a need for immediate humility. How do we get humility in this market if you're Paul Sweeney and you bought NVIDIA 2 years ago?
Well, Paul, well done. We'll start off with that. Right now, what I think we're seeing that's pretty interesting is some broadening of global growth. Last year was all about the U.S. being the engine, and now with the constant stimulus efforts by China, albeit focused on manufacturing, and that's trickling into Europe. We're seeing some very small, I don't want to overplay it, but green shoots in Europe. Even German confidence data this week came out slightly better than expected. And of course, in the US, we're seeing a pickup in manufacturing at the margin. So when we see a broadening, what it tells us is that we're going to see some slight shifts in preferences among investors. U.S. consumers and investors will have more confidence taking overseas risk, especially with a big valuation discount overseas versus the U.S. We'll tend to see more cyclical assets do well, commodities, small caps. We'll tend to see less liquid assets do well, emerging markets. And we often tend to see the dollar go down in this environment as U.S. capital goes overseas. The question I have, Tom, Paul, is does it last? And how big a move is this, or is it just incremental? And that's where the humility comes in. So I still like having a lot of my capital in U.S. markets. I think the U.S. economy is likely to remain strong for some time. But I think if you want to make a trade looking at a month or two, taking a little bit more risk overseas or in some of these areas I just mentioned, this is the moment.
So, Rebecca, I'm just reading through your notes. I see a lot of discussion of China. There are a lot of investors out there. I think I'm speaking for them when they say, I just don't know what to do with China. Some people say it's uninvestable. Some folks say, you have to be there because of the size of the market. How do you think about it?
Well, we have a huge amount of geopolitical risk, unfortunately, today around China, and we don't know if that's going to be status quo, get slightly better, or get a lot worse after the election. If Trump is elected in November, based on what he's saying during the campaign and his advisors, we could expect tougher trade relationships with China. And so that geopolitical risk you can't write off. Now, a lot of that has to be discounted in market valuations at this point. We know Chinese stocks, even though they're off their lows, are still cheap. We know there's stimulus, particularly in infrastructure and manufacturing. But again, is it a trade or is it investment? Right. Given the geopolitical risk, I'd view it as a trade, if anything. Okay. And then you can always go through proxies. Find companies around the world, sectors around the world that will benefit from this without having the exposure in the country. Oil's a great example right now. Oil prices going up. Part of that is demand from China.
Yeah, I find the Pacific Rim demand there to be key. Rebecca, I want to go all Bessemer Trust on you. Let's say you got a short-term vision of 3 years. I think a lot of our people watching and listening to us have that kind of perspective. And I got to be in the markets. And I guess the basic idea is there value in index, spread it out, capture it all, even if it's some form of adjusted index fund? Or is this where active management and stock picking and really trying to figure out free cash flow works out?
Well, what we've seen historically, Tom, is that when we're in a period with liquidity being taken out of the market, i.e. central banks tightening, quantitative tightening happening, that's when you get more dispersion within securities, and so active management pays off. What we saw in the last 10 years, this move in passive, so passive assets actually larger than actively managed assets, that's partly a function of zero interest rates. And I think that environment is behind us and will be for a while. So I think we're in a relatively better world now, and looking ahead, even if central banks cut a little, we're still not going to go back to zero. So I think we're in a relatively better place for active. At the same time, there are spaces, US large cap, global large cap, liquid government bond markets, where having some passive exposure makes sense because the fees are so low. If you can get your market beta, your market exposure cheaply, and then you can complement that with active management, pay a higher fee, take advantage of the dispersion that we're seeing in the markets with less liquidity, and have a barbell approach.
I think what's fascinating here, Paul, is the adjustment here on the 10-year real yield, 2%.
Yep.
That's like we're light years from where we were 18 months ago.
Exactly right.
You got one more, squeeze one more.
Rebecca, just real quick here. American exceptionalism, we think about the economy. Is that a thing here for you?
It has been. It's going to continue to be. And part of it, I think, that doesn't get enough attention is private equity. Now, I know private equity isn't crushing it right now, but the U.S. is more than half of global private assets, and we have an ecosystem that I think is going to continue to support that. That keeps capital coming into our markets. You take that plus the depth of our capital markets, you have our education system, you have a culture that supports entrepreneurship and innovation. I think that allows the U.S. to continue to benefit, especially in technology, and I think that can propel the exceptionalism at the margin as we look forward. It's ours to lose.
Got to run. Rebecca Patterson, thank you for getting us started strong. Rebecca Patterson, of course, formerly with Bridgewater Associates. Markets are going to speak here in 12 minutes with claims, folding economics into what we see for rate strategy. Meghan Swiber joins us right now with the Bank of America is where. Let's just get the land of Bank of America visualized. Where's the 10-year yield the end of this year?
You know, Tom, we don't really think it's going much further down. We have it at 4.25. Okay. So even with a Fed that's lining up to cut, we still really don't think longer term rates are going to rally all that much.
Folding claims in the jobs report tomorrow. I'm sorry, I see nominal GDP well over, Michael Gapin nominal GDP well over 4%. And I see numbers that say there's a fully employed America. Yep. Is that how you see it?
That's how we're looking at it, Tom. And you have a Fed that's guiding the market to cut. But this real question, and what Powell was alluding to yesterday, is they really don't know the level that they're going to cut rates to. A lot of questions around what that neutral rate is. It's a really abstract concept, but it's this idea that the Fed's hiked so much already, and we're really not seeing much of that cooling in economic activity. Seeing a lot of great progress on the inflation front, so that's what's going to drive the cuts. But really, at the end of the day, this could be a very different cutting cycle than what we've seen in the past, when the Fed is cutting to really ease conditions.
Well, given the Fed, I mean, there's a lot of cross currents out there. One of the big ones is the labor market. We're going to get jobless claims today, non-farm payrolls tomorrow. Yeah. How are you guys thinking about that?
So the labor market data is important, but really at the end of the day, when we're listening to the Fed, they know that the labor market data has been really strong. And so this question about when is it time for the Fed to cut really comes down to the inflation numbers. Recently, these inflation numbers have not been great for them. They're showing some signs of picking up, particularly in some of these cyclical components. So that really is what we think is going to weigh and move the needle more for the Fed than necessarily some of this labor market data.
Well, we started the year, the WIRP function on the Bloomberg terminal was suggesting maybe as many as 6 rate cuts. Now we're 3 or maybe even less than 3.
I'm not even watching it.
I know. It's kind of lost a lot of credibility with some people, the WIRP function. How many rate cuts are we going to see this year, do you think?
So House view of B of A's 75 basis points of cuts. So we see the Fed delivering that first 25 basis point cut in June. But here's the difficulty. If they're not able to go by June, you get some questions around how close they can really begin that cutting cycle around the election season. And then you've also got base effects coming from even just core PCE into the second half of the year.
Yeah, the lead guitar effects are as bad as well. Meghan, let me cut to the chase here, which is I would say nobody has a clue where we're going other than in the fixed income space, as witnessed by the real yield, we see a buoyant economy.
Yes.
Give us a primer on what a 2% 10-year real yield signals.
2% 10-year real yield is a nice investment opportunity for a lot of different clients, especially when we're looking at how much the equity market has rallied already. If you're worried about, some of these downside states of the U.S. economy, this is why people want to be buying duration. They want to be buying U.S. rates. But the issue here, again, is that we're not seeing this very meaningful cool down in the U.S. economy. And so rates are priced accordingly. We're having a lot of inflows into fixed income. I mean, you just look at IG high yield spreads, lot of demand there.
What inflows are you seeing at Bank of America?
I mean, what we're seeing is very strong inflows into fixed income funds across the board. And that's really helped support this tremendous amount of treasury supply that we see coming to the market, and also investment grade credit supply. There's been a lot of demand to chase these higher yields. The real question here is just how much are we actually going to be able to see yields fall if the U.S. economy is staying so resilient?
When you and your colleagues at Bank of America, it's Merrill Lynch in my mind. I'm sticking with it.
Thank you.
Yeah, one of my former employers. When you talk
wait a minute.
Yeah.
When you line up the major firms, can we say you've worked for them all?
And unfortunately, they've all gone out of business after I've left, including Merrill Lynch. So when you talk to your hedge fund clients,
Sure.
Are they buying treasuries or are they shorting treasuries?
It's a mix. It's
Okay.
a mix. So on the macro side, right, you have investors who are taking on this view that, well, maybe the Fed's not going to be able to cut at all this year. And that can really trigger a lot of concerns for exactly where that very important neutral rate is for fixed income. Is it 2% real yield or is it something higher? And so that really is a very big temperature check for whether or not we can see yields continue to move higher is going to be the neutral and when the Fed is actually going to be cutting.
They're at the Bank of America Palace. Okay, they're having lunch. They got pizza out.
It's a great office
Savita Subramanian, Meghan Swiber, Gapin shows up with 3 of his minions and all, and they're blah, 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 blah. And Brian Moynihan walks in. And what I know what Brian Moynihan's going to say is, but this is what we see in the real economy.
Yes.
What do you, forget about all the finance mumbo jumbo and the Georgetown financial malarkey. When you, with Brian Moynihan, look at the real economy, don't you see a buoyancy that's just irrefutable?
We do see that in a lot of the data that we look at. Our card data, for example.
Thank you.
Just a fun part of my job is we get to actually go out and meet a lot of our corporate clients at B of A too.
Oh, they meet their
and
clients.
The story,
how strange.
Besides just the hedge fund folks, right?
Yep.
So you can kind of get a good temperature check from that as well. And really the story has been a story of resilience. It's been a story of still needing to find people to fill seats in the job market. And it is quite strong.
I'll get
right now.
one more in here, but the science here, Meghan, is I just paid $1,900 for an economy ticket to Europe, and he says the restaurants are packed.
Packed, exactly.
That's it. Paul, get one more in.
What I love about Brian Moynihan, Tom, is when you ask him in an interview, hey, Brian, where do you think rates are going? What he says is, our rates people believe they're going there. Hey, where do you think the economy's going? Well, our economists say
he did that back at Bank of Boston.
He's very good at that, so he always gives you guys all the props. So, Meghan, here, I mean, I think one of the concerns for a lot of folks is people are saying this Fed is already behind the ball. Inflation is whipped. They should be cutting now. What do you say to those folks?
So the idea here is that a lot of the improvement that we've seen from the inflation backdrop so far has really been supply driven. It's been the story of the improvement in goods inflation, which was the easy part of the story. It was the part of the story that the Fed knew was going to be more transitory. The big question for the Fed and what we'll see in the upcoming data prints is whether or not we see more of this cooling in services. This is very important for inflation to come in sustainably where they want it to. So, certainly a lot of good progress has been made. The big question is the confidence and conviction around that staying where it is.
30 seconds. We're all watching Final Four with Meghan Swiber. And somebody asks you, are you worried about the ballooning interest expense of the United States of America? Are you?
So this is actually a very big part of certainly how we're thinking about deficits going forward. And this is really where higher for longer can become a big problem for the largest borrower in the world. If you're seeing rates settle above a 3-4% handle, that's above where we think the long run GDP growth is of the US economy and can contribute to a lot of these financing costs. So it's a concern, especially in an environment where the Fed's not going to be able to cut all that much.
Next time you come, bring Moynihan with you. We just want to hear him say, well, Meghan Swiber says this.
Exactly.
Meghan, thank you so
Such a
much. You're
pleasure,
the Bank of America Director, U.S. Rates Strategy. Jillian Tett says, shut up and read it. The book is simple, How to Listen When Markets Speak. And in classic Larry McDonald form, it's about, the text, but also along the way, vignettes, do this, don't do that, little appendices and that lead to thought-provoking work. And that is a hallmark of what Larry McDonald has done for years. Everything is always interesting in the Bear Trap Report. And then last year, he wrote, let me get the date out here, I think it was in the summer of last year. It was like an article in the New Statesman in London. Okay. It was like 10,000 words.
Oh boy.
Lawrence McDonald, these are the force that are putting a constant bid under the market. Every once in a while, he writes something that is so prescient, you just go, damn, I hate him. I've got to read these 10,000 words. Joining us now, Lawrence McDonald. Larry, great to have you with us. It's not that you nailed the bull market like Yardeni or Akampora, but you said there's this wall of money out there. How does that wall of money in your acclaimed essay, how does it fold into how to listen when markets speak?
Well, Tom, you think about passive investing, right? And Jack Bogle's up in heaven, God bless him. But, the Vanguard origination of passive investing. It started with the best of intentions. The best of intentions. But at some point, passive becomes a little bit more evil because there's 35 trillion, at least 35 trillion tied to the index, the S&P. And so when you have a stock like NVIDIA that's now become 5% of the S&P 500, 5%, and it's trading 80% above its 200-day moving average. Meanwhile, the energy sector as a whole is only 3% of the S&P. And so what happens is at some point, too much money is in passive investing. There's not a lot of thinking behind that, and it gets very crowded and what we call herdy. In other words,
right,
like a herd, and it creates more distortions on the upside, and it'll create more distortions on the downside.
Okay, somebody like Cliff Asness, who's smarter than me, they're basically apoplectic about the interior dynamics of the market. Years ago at Lehman, this is what you did. And my answer is, when you wake up in the morning, what does Larry McDonald apply from how to listen when markets speak over, I just want to get to the end of 2024? What's the dynamic you're using right now, Larry, to analyze this market?
Well, as a former Lehman trader, our first book was a New York Times bestseller, and it's done pretty well. It's in about 12 languages. But I tell my wife once a month, Tom, if we sell 1 million books, we'll break even on our Lehman stock, right? So, in other words, it's been a long road. But the lesson from this book is that the Lehman collapse, the response to that was a 4 trillion fiscal and monetary response. 4 trillion. The response to COVID so far has been all in about 16 trillion fiscal and monetary response. So everybody's in a 2010 to 2020 portfolio. In other words, everybody's in that kind of disinflation regime portfolio, which includes a lot of growth stocks. It doesn't include any hard assets. It's all financial assets. There's 22 trillion, Tom, in the NASDAQ 100, 22 trillion. And there's very little money in real hard assets, Bitcoin overall. Most of the money is in what we call financial assets. That's bonds and growth stocks. But in an inflationary regime that is sustainable, and that might just happen after a 16 trillion fiscal and monetary response, you probably need an entirely different portfolio. A 2020 to 2030 portfolio is going to look a lot different, lot different, Tom, than a 2010 to 2020 portfolio.
Exactly. Hey, so, Larry, the book is entitled How to Listen When Markets Speak. Boy, what are the markets telling us right now?
Well, right now we have a tremendous amount of capital that's moved into certain spots, and volatility is low. And there are opportunities really if you look at not just gold and silver, but look at aluminum, look at Alcoa. Alcoa equity is moving, I think about 60-70% off the lows, right? And that's since the fourth quarter. And you've got oil and gas companies making new highs in the XLE. So I think what's happened, what the market's telling us, is that there's a migration of capital that's starting. Capital is moving from financial assets into hard assets. And if Powell is truly on this dovish crusade in an election year, has to lean a little bit dovish relative to where inflation is, then I think the market's telling us that you want to start moving into your aluminums, your coppers, and your hard asset equities.
So, Larry, I mean, I guess, a lot of folks were sitting here and we're looking at the S&P 500. Let's just take that. From October, we're up 25% here. Is the market ahead of itself here? Do we need to get a little bit more cautious here?
Well, as a whole, the index, what we argue in the book is everybody's 401k in the United States has been hijacked by about 12 companies. And everybody knows that. And it's nice when it's rolling along, but it's more like we're heading toward a transition. I think the market's clearly overvalued relative to in a sustained inflation regime. And a sustained inflation regime is going to put on a lot of challenges to high valuations, and it's going to also move money into different spots. But yeah, I mean, I would be very cautious here relative to when the street's falling all over themselves to upgrade stocks. You typically want to take some equity off the table.
I want to get you back. We're out of time, but I got 30 seconds. Really important. How should our listeners and viewers use the financial media? You've been hypercritical. How should they use Bloomberg surveillance and other enterprises like the Michael Barr Show?
Well, I think, overall, the financial media, pay attention every day, have passion. And my goal with this book, When Markets Speak, is you can get everything in life that you want if you just help enough other people get what they want. Pay attention. Listen to Tom Keene every morning. That gets you stronger and smarter, and then make your allocations accordingly.
Book it, Sarah. Be sure we get young McDonald back again. Lawrence McDonald, thank you so much. How to listen when markets speak.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Bloomberg Surveillance, the Lisa Mateo Show. It's brought to you by Interactive Brokers Bond Marketplace. Access Interactive Brokers' vast selection of over 1 million global fixed income securities, no markups or built-in spreads, and low transparent commissions. Learn more at ibkr.com/bonds. What do you have, Lisa Mateo?
All right, we're starting with X. This is Elon Musk's X. Those blue check marks, they've come back to some Twitter, I keep saying Twitter, sorry, X accounts. It started last night, okay? So they gifted those premium subscriptions to the service that comes with those blue check marks. So Musk posted back in March that it's going to happen. And apparently last night it did. Who gets these?
The players.
It's accounts, yes, with over 2,500 verified subscriber followers. So not just a follower like Joe Blow from the Bronx. Like you have to have some verified subscriber followers. And then accounts with over 5,000 of those same followers will get Premium Plus for free. Not everyone, they're happy about it. They don't want followers to think that they're supporters of Musk. But I do want to point out that Mr. Tom Keene does have the blue check mark.
Nice.
Back on his account.
Of course he does.
I wake up this morning. The dogs are mental about the winds, the hurricane winds we're having. And there's Olivier Blanchard, the giant of French economics at MIT. They gave Olivier Blanchard a blue check. He's like, mon Dieu, why are you doing this? And then I see Bramo has one now.
Yes,
of course.
Joe
Weisenthal has one. We're waiting for Lisa to have one.
I don't have mine.
You don't
have yours either.
It's coming.
We're not part of the
It's a
cool
sign
crowd.
of desperation. Let's be honest.
Well, they're trying to get those users, keep the popular ones. They still want people to, perform on the platform.
I'm not going to mince words, folks. I would love to find a way to exit X because of the garbage that's in my feed, the inappropriate stuff that's in my feed.
Have you joined Threads?
I tried it for 2 days. Did you try it? Paul?
As did everybody else in the world for 2 days.
Dead on arrival.
Yeah, dead on arrival.
It's like a committee formed it. These things have a real personality, like Lisa Mateo, who Elon deserves a blue star. Next.
Okay. This one is interesting. The estate of comedian George Carlin, who died back in 2008.
One of my heroes.
They filed a lawsuit against 2 podcasters who were allegedly using AI to create a new Carlin comedy special that was released on YouTube. Well, it turns out they reached an agreement to end the lawsuit. The podcasters will remove that AI-generated special. They're going to stop using his image, his name, his likeness, unless they get permission.
Oh, what do you think?
Yeah.
I think it's artificial intelligence, Tom. It's kind of one of the risks to artificial intelligence. Artificial intelligence can create the video, the audio, everything. And so if you're a content creator, think about the writers in Hollywood, you're really concerned about that.
Keith Grossman called me up. Keith Grossman, folks, did a lot to generate Bloomberg surveillance, and he was hugely formative in what we do here, and a great advisor as well. Keith Grossman called me up, and he's doing his fake Tom Keene voice, and he's like, Tom, we don't need AI. We could just have Keith do it. And, I mean, this is going to be out of control fast. Right?
Yeah, and that's why this is a big thing, because it's advancing, the AI deep fake technology laws. So it's starting to do it.
So the Carlin estate won.
Yes, they agreed to settle. So yes, they reached an agreement to end that lawsuit. So it's a step in the right direction.
This one I don't get. And the Wall Street Journal, what are you doing here?
The Wall Street Journal. So I don't know if I had braces growing up, and I hated it.
Yep. But your teeth are perfect now.
My teeth are amazing. Thank you, Mom and Dad.
Yes.
But now the nerd look is cool again, because kids, or Gen Z, are getting fake braces. So they're cosmetic braces. They buy them online. They apply them at home with scissors and glue. I'm sure their parents are not thrilled about this. It's a trend on TikTok. But apparently a lot of licensed dental professionals are installing these fake braces. So they have pre-made wires, brackets. They put them on your teeth with nail glue. It doesn't sound right. I don't know how you get them off. I didn't get to that point of it. But it's this new trend going on, and I don't know, but orthodontists are saying it's not good. The risk can include tooth loss, even gum recession.
This is nuts. I mean, there was one orthodontist guy up in Massachusetts. I bought him a new Hinkley Bermuda.
Yes, exactly.
He put like 14 more feet on the sailboat due to the offspring's horrific teeth.
My daughter too. $6,000. Done.
And
gone.
Then afterwards, you have the plastic thing afterwards.
Yes, the retainers.
Yeah,
they're under the couch with the airplane.
Yes.
Yeah, my 19-year-old just reached out to me and said, "Can I get Invisalign?" And my answer was no, because I spent that $6,000 on the braces, and you did not wear the retainer when you were 15 or 16, when you should have.
So
and
tough.
now you're.
Lisa, can we rent? We need to rent. We need to rent the Irish guy to come over the house.
Exactly.
Talk to my kid.
Are you done, or is there one more?
We've got one more.
His Yukon landed?
No, this is a medical breakthrough. Okay, the patient, you remember hearing about it, transplanted pig kidney. He's headed home. He's been discharged from the hospital after surgery. The doctors, this is at Massachusetts General Hospital. He's 62 years old. His name is Richard Slayman. He is working fine. They say the kidney is producing urine, removing waste products, delivering the body's fluid, so it's doing all the things it's supposed to. The guy even says he left the hospital with one of the cleanest bills of health he's had in a long time.
Wow.
So there's still no word if, anything can go wrong after that, but it's this step in the right direction of, cross-species organ transplantation could become a thing.
We had Sam Fazeli in our studio yesterday, Bloomberg Intelligence.
Did you?
Yeah, he does all the pharma stuff, and he just said they're making amazing breakthroughs in cancer drugs and dementia. He's heading out to a conference in San Diego this weekend where they have some major breakthroughs in dementia and Alzheimer's and things like that. So he says these next 10 years are going to be really big for medical breakthroughs.
One night we had an offspring in MGH, and to make a long story short, everything worked out fine due to the wonderful people at the Massachusetts General Hospital. And I was wandering around the halls at 3 a.m., board stiff, everybody's finally sleeping. And I wandered into the pretty much extant 1846 ward where they first used ether. And that was at MGH in America. They were doing it in England and all that. But it was 1846 was the first public demonstration of what we all take for granted today. It's really spiritual.
Mass
It's
General.
very cool what they're doing up at MGH and, of course, some of the other great hospitals.
This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube.
Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.